Welcome to the video on self-constructed assets and capitalizing interest. On this one, we're building a building ourselves, and it's going to take a year to do. We're going to start the 1st of January and end at December 31st. And we purchased, Welcome to the video on capitalizing interest. We are in the process. We're going to build a building, and it's going to be self-constructed, and that's why you have to capitalize the interest. We're going to start at the 1st of January and end it by the end of December. So it's just for a one-year project. Now on this one, we borrowed $1 million at 8% specifically for the building project. And this is for when the weighted average amount is to be capitalized is less than the amount we borrow. And then we have some general borrowings of $2 million and $3 million for a total of 5 of these two, but a total of 6 altogether. First thing we need to do is find out how much interest is subject to capitalization. And so what we'll do is we'll take the 1 million times the 8%, gives you 80,000, and then we'll have the 2 million times the 10%, and then we'll also then take the 3 million times the 11%. Now for this one, we just want to add the 200,000 plus the 550, because the rule is if it's less than $1 million, that will be capitalized at 8% interest. Anything over $1 million will be a generalization, which is the weighted average of these two. So for the weighted average, and the total amount capitalized, of course, is the 80,000 plus the 530, or 610,000. Now to get the general rate, though, we take the 530,000 divided by the 5 million, and we get 10.6%. This is the amount we'll use for anything that we need to capitalize over the $1 million. So the first thing we have to do is look at how much did we actually borrow, did we actually spend. So we had 500,000 on January 1st, and that's for 12/12ths of the year. Okay, so that's 1. And then we multiply the 500,000 times the 12/12ths, and that gives us 500,000. Then you see on March 31st, we spent another 400,000. Because what we're trying to find out is how much on average was out there. Now, March 1st was out there for 9 months. So it's 9/12ths, and you notice that should convert it to 3/4. And then we multiply these two. So we have the 400,000 times the 3/4, and we get 300,000. On September 30th, we spent another 600,000. And that's out for September. We have October, November, and December. So that's 3/12ths of the year. And when we multiply those two together, 600,000 times 1/4, and that gives you 150,000. And then on December 31st, we spent 250,000. Well, that's out there for 0 part of the year. So then we'll multiply 250 times the 0, and of course that gives you 0. Then we simply add these up, which is way over there, and that gives us 950,000. Now you notice the 950,000 is less than the $1 million. So what they put in here, we're going to put 950,000 times 8%, and that's going to equal. Okay, that's why I just put the formula so you can see what we did. So 950 times my 8%. So this is the amount we're going to capitalize, is $76,000. So we have interest expense is our debit. Now interest expense for the year is equal to the 610 minus the 76,000, or 534,000. That's how much we'll actually capitalize. And then we'll increase the building account by the 76,000, because that's why it's called capitalized interest. And then of course cash will be for the 6 the 610 up there, which also should be what those two add up to. Okay, and let's get this so that it's a little bit nicer, because we like to have credits indented. Okay, now what I have here is for the building account, and I'm just going to do an easy way of doing it. This is for my dates, and the last one is also 12/31 of 15. Okay, so we're going to pay. What did we do? Well, we started with 500,000, and then we put in 400,000, and then we spent 600,000, and then 250. And then the last entry is the capitalizing interest building. We added another 76,000. So what we have here is my totals for the building project, how much we have on the building. Okay. So we have 1,826,000 that we actually spent for the building. The 76,000 increases the value of the building. The 1,826,000 is what you would use for depreciation purposes for the building. And this is how you do it if you have self-constructed assets that you need to capitalize the interest for, and the amount you capitalize is less than the amount that you actually spend. Okay, well, you spent $1.826 million, but it's less than the amount capitalized is less than what you borrowed. Okay, this is the first video on the spending less than the amount borrowed, and the next one's going to be spending more than the amount borrowed. So hopefully this helps.